There's a video going massively viral right now, claiming the US government has a secret plan to erase $37 trillion in debt using Bitcoin and gold revaluation. And I'll be honest, when I first saw it, I thought, that's either genius or complete nonsense. So I spent the last week digging through Federal Reserve documents, executive orders, economist analysis, and historical precedent to figure out which one it is. And what I found, it's way more complicated than either side is saying. Some parts of this theory are based on real policy moves that are actually happening right now. Other parts are, frankly, economically impossible. So in this video, I'm going to break down the viral claim, show you what's actually true, what's misleading, and most importantly, what this actually means for your money. Let's get into it. Okay, so here's what the viral theory claims. The US government owes $37 trillion more debt than any nation in history. According to this theory, they're not planning to pay it back through traditional means. Instead, they're allegedly executing a sophisticated debt elimination strategy through three key moves. First, accumulate strategic reserves of Bitcoin and gold. Second, revalue those assets at multiples of their current prices. And third, use that revaluation to technically balance the unpayable debt on the books. The claim is that when they revalue Bitcoin and gold upward, they simultaneously devalue the dollar downward, effectively stealing purchasing power from everyone holding dollars. The theory calls this legal theft and says it's happening right now without anyone noticing. Now, before we dismiss this or accept it, we need to look at what's actually happening. Because here's the thing, some elements of this are based on real events. In March 2025, President Trump did sign an executive order establishing a strategic Bitcoin reserve. That's not a conspiracy theory, that's documented policy. The US government does hold over 200,000 Bitcoin from criminal forfeitures, and there's proposed legislation called the Bitcoin Act that would have the Treasury purchase up to 1 million Bitcoin over 5 years. So the question isn't whether the government is accumulating Bitcoin, it's whether they're doing it to erase debt through revaluation. And that's where things get interesting. Let me show you what's real and what's speculation, starting with the strategic Bitcoin reserve. According to the executive order and subsequent White House briefings, the reserve is capitalized exclusively with Bitcoin already owned by the federal government, primarily from criminal and civil forfeitures. The stated purpose is to position the U.S. as a leader in digital asset strategy and treat Bitcoin as a reserve asset, similar to how we hold gold. The executive order explicitly states that agencies should not sell Bitcoin from this reserve. It's meant to be held long term. Now, the proposed Bitcoin Act goes further. It would direct the Treasury to purchase 200,000 Bitcoin per year for 5 years, aiming to acquire approximately 5% of Bitcoin's total supply. That would be worth around $80 billion at current prices. The bill includes a 20-year minimum holding period. Now here's the critical part that the viral claim gets wrong. The strategic Bitcoin reserve is explicitly designed to be budget neutral. The executive order directs the Treasury and Commerce secretaries to develop budget neutral strategies for acquiring additional Bitcoin. Budget neutral means they're not supposed to just print money to buy it. Proposals include potentially selling some gold reserves or using other existing assets. This is very different from the claim that they're planning to revalue assets to erase debt. Let's talk about the U.S. debt situation itself. As of right now, the national debt is actually over $38 trillion and growing at about $1 trillion every 180 days. That's real. The debt to GDP ratio is around 121%. Interest payments on the debt cost about $880 billion last year and are projected to exceed $1 trillion annually soon. So yes, the debt situation is serious. 3 credit rating agencies have downgraded U.S. debt in recent years. Moody's, Fitch, and S&P have all cited concerns about fiscal sustainability. Now let's examine the core claim about revaluation. The theory suggests the government could revalue Bitcoin and gold upward on their books, creating paper gains that offset debt. Here's why this doesn't work the way the viral claim suggests. First, accounting mechanics. The U.S. holds about 207,000 Bitcoin and over 8,000 tons of gold at Fort Knox and other depositories. Even if Bitcoin hit $500,000, and that's a massive if, that's only about $100 billion in Bitcoin value. The gold reserves are worth around $600 billion at current prices. Combined, even with aggressive revaluation, you're talking about maybe $1 trillion in asset appreciation maximum. That's less than 3% of the $37 trillion debt. The math simply doesn't work to erase the debt. Second, how government accounting actually works. When governments hold assets, they're typically recorded at historical cost or market value, depending on the asset class. Simply declaring we're revaluing Bitcoin to $1 million per coin doesn't create economic value. It creates an accounting entry, but the debt is real. It's owed to Treasury bondholders worldwide. You can't pay real creditors with accounting adjustments. Third, currency devaluation dynamics. The claim suggests that revaluing Bitcoin and gold upward devalues the dollar. But that's backwards. If anything, holding more scarce assets would theoretically strengthen the dollar's backing, not weaken it. Currency devaluation happens through money supply expansion, inflation, or loss of confidence, not through asset revaluation on government balance sheets. I actually reached out to several economists about this theory. In a February 2025 University of Chicago survey, not a single economist agreed that creating a strategic crypto reserve would benefit the U.S. economy or reduce risk in central bank reserve portfolios. Now, that doesn't mean Bitcoin has no value. It means economists don't see it as a debt elimination tool. So if the viral theory doesn't hold up economically, what is actually happening? I think there are three real stories here that are getting conflated. Story number one. The US is legitimately exploring Bitcoin as a strategic reserve asset. This is partly about digital asset leadership, partly about not missing out if Bitcoin becomes a major global reserve asset. Countries like El Salvador have already done this. Multiple US states are passing their own Bitcoin reserve legislation, New Hampshire, Texas, and others. The Trump administration is clearly pro-crypto and sees strategic value in holding Bitcoin long-term. That's real policy, not a conspiracy. Story number two. There are legitimate concerns about dollar devaluation through traditional means. Not through Bitcoin revaluation, but through inflation and money printing. When the government runs massive deficits and the Fed prints money to buy treasury bonds, that does devalue the dollar. This has been happening for years. It's why inflation hit 9% recently. It's why everything costs more. That's actual purchasing power theft, just not through the mechanism described in the viral claim. Story number three. Hard assets like Bitcoin and gold do benefit from dollar devaluation. As the dollar weakens through inflation, scarce assets tend to appreciate. So people holding Bitcoin or gold do see gains while dollar holders lose purchasing power. This creates a real wealth transfer effect. It's just not a deliberate government strategy to erase debt. It's a consequence of deficit spending and monetary expansion. Now, here's where it gets nuanced. Could a future government theoretically attempt something like the 1933 gold revaluation? Back then, FDR did effectively default on gold clause obligations by changing the dollar to gold conversion rate from $20 per ounce to $35 per ounce. This was a partial default that devalued the dollar against gold. The Supreme Court ruled it was technically a default, but that creditors weren't entitled to compensation. So there is historical precedent for government asset revaluation affecting debt burdens. But that was under completely different circumstances with a gold-backed currency. So bottom line, is this debt erasure theory hype or reality? It's mostly hype with kernels of truth. The viral claim is wildly exaggerated. The government is not executing a secret plan to erase debt through Bitcoin revaluation. The math doesn't work. The accounting doesn't work. And no mainstream economists support this theory. But, and this is important, there are real concerns embedded in this theory worth paying attention to. The US is accumulating Bitcoin as a strategic asset. That's real. The debt is unsustainable at current trajectory. That's real. Dollar devaluation through inflation is happening. That's real. And hard assets like Bitcoin and gold do provide some hedge against currency debasement. That's real. So what should you actually do with this information? First, understand that the debt crisis is real, but it's not going to be solved through Bitcoin revaluation magic. It will either be addressed through spending cuts, tax increases, economic growth, or some combination, or it won't be addressed and we'll face a debt crisis through bond market pressure, higher interest rates, or currency crisis. But it won't be through the mechanism described in the viral video. Second, diversification makes sense regardless of these theories. Holding some exposure to scarce assets like Bitcoin or gold as part of a balanced portfolio isn't crazy. Second, diversification makes sense regardless of these theories, which we're likely to see more of given the fiscal situation. Third, stay informed but skeptical of viral financial theories. When something sounds too clever or too conspiratorial, it usually is. The real financial risks we face are boring and well documented. Unsustainable deficits, rising interest costs, inflation. These aren't secrets. They're in CBO reports and Fed minutes. And look, I get why theories like this go viral. They offer simple explanations for complex problems. They make you feel like you've discovered hidden knowledge. But the reality is usually more mundane and more complicated. The US debt situation is serious. The government is experimenting with Bitcoin as a reserve asset. Dollar devaluation through inflation is real. But there's no secret master plan to erase debt through asset revaluation. That's financial fiction, not financial fact. If you found this analysis helpful, let me know in the comments what other viral financial claims you want me to fact check. I'm planning to make this a series. And obviously, this isn't financial advice. I'm just a guy who reads a lot of economic papers and government documents. Do your own research. Talk to a financial advisor. Make informed decisions for your own situation. One more thing before you go. If you're interested in Bitcoin or the strategic reserve specifically, I'll link my sources in the description. the actual executive order, the Bitcoin Act text, economist surveys, all of it. Because transparency matters. And in a world full of financial hype, showing your work is how you build trust. Thanks for watching. I'll see you in the next one.